JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 25th of November 2020. So yep, welcome everyone. Welcome to this Wednesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay guys, so I hope you're all having a nice, good, wonderful start of the day today. Do apologize for not running this one on Facebook, because normally we stream that one on Facebook as well, but there's a little bit of a technical issue here with one of our softwares. But anyway guys, I hope yeah, I hope you can join me here on YouTube. So yeah guys, as always, before we jump into the charts, a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So okay, now then, jumping into Nikkei 225. So a wonderful push further north we saw here today. However, you can see that the index then kind of started retracing lower. So that happened after the index hit the resistance area around the 26,700 level. So and then kind of drifted back down a little here, and basically it still remains in positive territory. However, we saw this little correction lower. So of course, let's see how all this is going to play out and how the European market is going to play out today, if they're not going to take this as a negative indication here. Yep, for now, if by any chance it suddenly starts dropping back below the 26,000 territory right here, then yes, we could go for a bit of a larger correction to the downside. However, keep your eyes on some of these levels, like the 25,254 territory. I spoke about this one previously, or even below that. So again, for now, if it remains above that 26,000 territory, then yes, still there is a chance for this one to drift higher. However, if it starts starts moving below it, then, well, I mean, maybe this is where we should take a bit of a cautious approach. Now Shanghai Composite, of course, is, or not of course, but is drifting lower, but it failed to reach the upper bound of the range here. So initially I was targeting that, but as you can see, it fell shy of a few kind of points from reaching that, and yep, now it reversed lower. However, some of you might say maybe that's not not a big deal, maybe it's just seen as a temporary correction right now. So yep, we could see that idea. Yep, we could pick up on that idea if the price stays above the 21-day EMA. So if the daily candle remains above this 21-day EMA, like for example it did here on the 13th of November, although we saw a drop here, but still the bulls kind of picked up here and kept and closed the index above this 21-day EMA. So in other words, guys, yeah, we might get a false breakout below this 21-day EMA, but if the body will remain above it, then yep, there's still hope for the buyers. However, if the daily candle closes below the 21-day EMA and starts dropping below the 3,326 territory right here, now that's where we will start maybe considering a bit of a decline. However, I'll pick up on that if we do see that move. For now, I'm considering this idea as the more possible one. Now, of course, if you're looking for an entry here somewhere, but probably it's not the it's still moving lower, so that's why we need to first see if it rebounds. Again, for now, that's the idea. Let's see if it rebounds. If it does, then yes, I'll I'll aim for this for the upside again. But at the moment, I mean, guys, don't get me wrong, I mean, it still could drift a little bit lower here. It could end up maybe like I said, hitting this 21-day EMA, and then we'll take it from there basically. So now jumping into the German DAX, the index yesterday closed fractionally below that 13,300 zone. So in other words, yes, it did came close to it, but it still closed below it. Of course, the cash index traveled further above it, and right now we can see that the cash index is balancing slightly above that 13,300 zone. So in a way, that's a good indication, a positive one. Let's see if nothing changes, because again, be very careful right now, guys, because although there are positive news coming out regarding the vaccine, and yes, of course, that kind of brought the risk-on environment in the past few days. However, if suddenly something starts showing up like that, it's still in the works, or it cannot be distributed straight away, or let's say the political situation in the US, if there are going to be any hiccups in terms of transition of power, I mean, yep, that might kind of act negatively for the equities, and maybe that's the reason why the Shanghai Composite and Nikkei kind of reversed a little bit south, not much, but just a little bit. So basically, keep your eyes on DAX as well. Let's see how all this is going to play out. But from the technical side on DAX, if the price continues to trade above the 13,300 level, now, yep, we could continue aiming higher here. So yep, let's keep an eye on that one. In terms of the downside, I would need to see this one dropping below the 13,000 mark in order to aim for some lower areas, guys. Now DXY, another index, but this time is a dollar index, and here the index drifted lower yesterday and remained fractionally below that level that I was talking about. Today you can see that it's trading below this area, below this 92.24, and in a way what I can say here is that if it continues to trade below this area, then yes, of course, we'll aim for the next target, which is the lowest point of September right here, and that's roughly around the 91.75 zone. So let's keep an eye on that one. In terms of the upside, I need to see a push above the 92.61 zone still, and I still need to see that daily candle remaining above this area in order to consider maybe some slightly higher areas. Gold. So gold basically worked out nicely according to the plan. Everything's we've reached our 200-day EMA here. We didn't reach the 1795 territory, however, that's fine, we'll take that. It's okay, but you can see that yes, gold managed to find good support near this 200-day EMA. Now the big question here is what is going to do further. Of course, a lot will depend on DXY. If DXY will continue to slide, gold might, I'm not saying that gold will strengthen here, but it might remain around here somewhere. Basically, it might remain calm. However, if the dollar index suddenly rises sharply, now that a strong move lower here could be possible. So if you're looking for some areas here at the moment, wait for a drop below this 1795 territory, and then aim for some lower areas, because at the moment it's a little bit tricky here, because don't get me wrong, we might see this one recovering here at some point. And now in terms of the upside, so previously I spoke about this 1877 territory, but given that we have moved already more to the downside, I'm going to start looking at the at higher levels if we get if we see gold climbing back above the 1860 territory right here. So something for you guys to keep in mind. Now WTI oil and in general oil market is quietly climbing higher. And if you can see here, for example, yesterday we had a nice beautiful pop here above this highest point of August, and the most important daily candle stayed above this area, and today, yep, we saw a continuation move higher. Don't get me wrong, at some point we'll have our little correction lower here, but the big question here now is when and where will we be that nice area of resistance. So for that we need to go towards these areas here. So as I mentioned to you guys yesterday, my next target is the 48.64 territory. So in a way what could happen here is that yes, WTI oil could continue pushing further north, and yep, it might test the area around the 48.64 zone. So yeah, and this is where the it will be quite interesting to see actually if WTI oil can find good resistance here and then correct lower, or will we see a correction lower earlier. If we see the correction lower earlier, then keep your eyes on the highest point of August, because if it continues to provide or should I say continues to act as a good important level, then and that level is around the 43.75 territory, then we might see that rebound and a push higher again. So in a way, for now, you can also draw this this upside support line, tentative of course, but nevertheless a steep upside line. So in a way, it could play out. However, it's like I said, it's very tentative, because in a way WTI oil could drift lower here, maybe break this upside line, but find good support near this 43.75 level and then push higher again. So it might start maybe consolidating somewhere around here, and then it could push higher. So that's why maybe this upside line is not really worth the while. However, in terms of the downside, if the price suddenly drops below this area right here, the 43 zone, then yes, we could start maybe consider a move lower. For now, everything is still leaning a little bit more to the upside. So again, let's see how far this can travel. My next target, as I said, the 48.64 level, that's the one. And yeah, after that it's going to be a little bit tricky here. I mean, we'll see what he wants to do, but again, like I said, for now, keep your eyes on this one. If it pushes further north and climbs, for example, above the today's high, then yep, my next target is the 48.64. If it struggles to push above its current high of today, then maybe we'll see a bit of a correction here to the downside. But all eyes are on this 43.75 level to see if it acts as a good area of support or not. Now jumping into Ripple, so we're seeing a nice correction lower. So after yesterday's or should I say after this monstrosity of a move, and yep, after reaching the 0.78 level, the crypto now is correcting a little bit to the downside. It did drop initially lower a little bit. However, as you can see, as I mentioned to you guys yesterday, that if I want to look at some lower areas, I'll wait at least for a drop below the 0.57 territory. So this way the crypto might drift further south. In that case, go for a larger correction, but if it stays somewhere above this 0.57 territory, then maybe something like a curved up here scenario could be possible, something basically like this, guys. So again, if you want to be a little bit more on the safe side, what you could do is keep your eyes on today's high. Today's high is roughly around the 0.7087. If we get a push above this area, that's where we'll aim for the upside again. We'll aim for that 0.78 zone, and then maybe for some higher levels even. But again, for now, let's be very careful. We already had a very good steep up move, so today maybe we'll get something like we had here on the 22nd of November, a bit of a corrective day, and then maybe tomorrow we'll see another explosion here. So again, something like that could be possible, but again, I'll keep an eye on these two levels for now, the 0.57 on the downside and the 0.7087 on the upside. Jumping into AUDJPY. Oh, by the way, guys, of course, for the most important thing right now today is of course the economic calendar, because we do have a huge data dump from the US basically, and there's a lot to keep an eye. So basically be very careful today. Volatility might be increased. Of course, it's the last trading last full trading day of this week for in the US. And yeah, that's why, guys, I mean, be very careful. The market might be choppy, or if it's not choppy, then it could be one-way traffic. So if you do like to scalp sometimes, yep, definitely have your stop losses in place just to be on the safe side. And in general, always have your stop losses in place, guys. But today, for example, we do have the initial jobless claims, which were moved from Thursday to today. We have the core durable goods. I mean, that's we have the crude oil inventories from the US as well. That's something to keep an eye on if you're trading oil. Also, we have the PCE price index, the core and the headline. So that's something to keep in mind, because that's one of the most kind of watched indicators of the Fed. So again, something to keep in mind. Also, we have the GDP figures from the US, the preliminary ones, of course, but yep, we'll see how that's gonna come out. Then yes, of course, I think that's kind of retail sales, of course, new home sales, guys. I mean, yeah, that's going to be quite an eventful day. And of course, to top it up with everything will be the FOMC meeting minutes. So basically, we have a huge amount of data coming out from the US today. So be very careful on that one. From Europe, we have the ECB financial stability review. So again, might not move the market much, but yep, if you're going to be trading during the US session and and let's say a couple of hours before the start of the US session, then be very careful of the economic data, guys, today. So coming back to the charts, here, for example, AUDJPY, you can see that it pushed above this 76.77 territory. I talked about this one, but it failed to climb above that 77.10 zone. So what I was talking about previously was that yesterday was that if we get a push above the 76.77 territory, there's a good chance to move further north towards the 77.10 zone. But if that fails to provide good resistance, then yes, a further move higher could be possible. As you can see, the move higher did happen, but it failed to overcome this 77.10 zone. So what I'm going to do here now, my main the barrier that I'm going to be keeping an eye on will be this 77.10. So if we get a nice push above it, this would confirm a forthcoming higher high. More buyers could join in and potentially drive this one towards the 78.46 level. In terms of the downside, I need to see at least a move below the 75.76 territory in order to consider some lower areas. USDCHF, so of course one of the pairs that will be in the spotlight, and of course, as you can see here right now, I talked a lot about this this pair, and yesterday, for example, and in the beginning of this, and on Monday and last week, and basically the same story remains, guys. I mean, although we saw a nice push here on Monday to the upside, what I was saying that still we need to see the break of this downside line and then a push above that barrier here, this barrier right here, the 0.92 territory. So I need to see a nice good move above it in order to aim for some higher levels, because at the same time the rate would be placed above the 100-day EMA and more buyers could be joining in. That didn't happen. Yes, it did travel closer to this downside line, but the break didn't happen, so it kind of drifted back down here. Of course, keep your eyes on DXY. At the moment, DXY is kind of a little bit more negative than positive. And here, what could happen basically is this scenario that I still have on my chart. I talked about this in my previous videos, basically where I was saying that if we get a drop below somewhere below this 0.9019 area, then we could see a bit of a move lower towards the 0.903031, approximately around here. This is where I'm gonna kind of halt for a bit, because basically what I was saying that in a way, if it if this area provides good support somehow, yes, we might see a bit of a rebound here. And if we do see that rebound, then we could be potentially considering here a nice inverted head and shoulders pattern. However, that's still way too far. Don't really focus on that idea too much, but if we get a drop below the 0.9090 level and then we get a hold up somewhere near the 0.9030 territory, then yes, we might maybe start considering this idea. But for now, probably just we'll take it as it is. USD ruble. USD ruble, I've talked about this one, and basically I've mentioned to you guys previously that, some of these exotic pairs that I do like to look at sometimes. So basically, previously when I looked at this one, I said to you guys to keep your eyes on the 76 territory, and we can see that we had a nice drop here below this. The daily candle remained below this area. It found good support near this 100-day EMA, also something that I've mentioned. Now the big question here is, can it stay below this 76 territory? If it can, well, I mean, further declines are possible here. And to be honest, if the dollar gets weaker, WTI oil continues to push higher, yep, all this is going to be in favor of the Russian ruble here. And yep, we could see USDRUB kind of dropping further north, further south here, towards the 74.58 territory, or even below that. My main target for now is this 200-day EMA, which is also near the 73.36 territory, roughly around here, which is around near the lowest point of September. A quick update on EURCHF, and this is quite beautiful here. Basically, the pair is well, did move higher. This is what I kept talking over and over again. Basically, it was forming this potential nice bullish flag here, and to be honest, right now we can see that it was a bullish flag, so we can confirm that. And because we had a nice break here above this 1.0825 territory, and we saw the daily candle staying above it. Not only that, on the positive side, the pair started moving above this downside line taken from the high of the 5th of June. So of course all this is looking quite positive. However, guys, wait for this daily candle, because again, at the moment, if we see this daily candle remaining above this downside line, yes, wonderful. Could start looking at maybe the highest point of September here near the 1.0877, or the highest point of June here near the 1.0915. But at the moment, yes, everything's kind of leaning a little bit more to the upside. But the European session has just started. The US session has not started yet. We still have a full US session to go through. So that's why also be very careful on that one. If somehow risk environment changes and into a risk-off one, then we might see a lot of yen buying, Swiss franc buying, and well, this pair could reverse south. So something for you guys to keep in mind. So let's see how this is going to play out. But again, for now, yes, everything's looking quite positive, but I need that daily candle staying above this area. And finally, EURUSD. So pushed nicely to the upside yesterday, remained above the 1.1880 level, and you can see the results here. Yep, it stayed above it, and today, this morning, we're having a nice move higher. Now the big question here is this little obstacle on the way, the 1.1918 level, marked by the high of the 10th of September and near the high of the 9th of November, will it provide resistance? Or I should say, will it provide strong resistance? If it does, well, I mean, we could see this one struggling, maybe we could see this one reversing back down. However, as I said, keep your eyes on DXY as well. Weaker dollar might help out here, this pair, and if we get a pop above the 1.1918 level, yep, higher levels could be met, guys. So keep your eyes on that one. So guys, I really hope you found it useful. Thank you very much for watching and listening. I really appreciate your time, and I can see the likes here, guys, already coming in live, so thank you very much for that. I really appreciate that. So if you want to catch my video later on, my trader's tea time is always 14:15 GMT time. But for now, guys, have a wonderful trading day. Stay safe. Most important, don't overtrade. If it's going for you guys, yep, you can continue trading. But if it's not working out, it's just one of those days, guys, and just probably don't try to capture or something. Leave it and come back fresh, and you'll see that's always a better kind of solution. So guys, have a wonderful trading day, guys, and I'll see you later. Thank you very much, and bye-bye.